everyone, welcome back. This is Ryan, and today I'm just going to make a bit of an impromptu video on Bitcoin because we've started out the week with, as you can see, a bit of a pump in the market. But I think everyone's trying to get a bit ahead of themselves here and ignoring some of the liquidity that's been created in the previous moves over the past couple of days. Focusing on this structure and why the liquidity is here and why the liquidity is here and some of the confluences that we've got, some of the trend-based Fibonacci's that we've got lining up at the same levels, and why I think we come down first before heading up. So to start with, I'd like to go into some subdivision of these waves. I think this is quite clearly an impulse to the upside. What you can see here, it's nice 5 waves. Really good clean subdivision within the 5 waves as well. I suppose the question really is if the ABC correction started here down for an ABC, or if we've done it as I've got it drawn out here. Either way, we get a couple of targets, some different targets. Let me have a quick play around with the trend-based Fibonacci's, and you'll see why I think we come down to this region first before breaking this liquidity. So depending on how we've got the 5 wave impulse drawn, if we have 5 finishing here or 5 finishing up here where I've got this B marked out, we'll draw trend-based Fibonacci's for both. So down to A, up to B, and you can see that one of the major key levels that we'd be looking for, the 2414, comes right beneath this 1414 trend-based Fibonacci that we've got drawn right here. I know that's a lot of lines on the graph, but you can see a bit of confluence here around the 22,300 zone, and that's what I like to look for, especially when trying to analyze the markets and really decide what my next move is going to be. Looking for a lot of confluence, trying to see where we're trying to look out for. Analyzing, does that take some liquidity? And it does. It takes a massive amount of liquidity that we've got here that's untapped. So I really think we come down first before going back up. So clearing the charts up a little bit, we'll simplify it back down and analyze why this liquidity is being created here. As you can see, we've had untapped. We had an untapped liquidity that was right here of wicks coming up to it, and we came back up to it, and that's why there's a lot of liquidity here. This is where people have been making decisions in the market, and that's where market makers benefit from it, because market makers decide what they're going to do a long time before many traders in the market do. So the market makers up here are building shorts. So when you see that price is rising, and the common concept is that is when people are buying. It's totally false. It's when price is declining like this, that's where the market makers are buying. And when price is rising like this, and you see this kind of formation here, nice little head and shoulders structure, looks a bit weird that, but try and imagine that just as a head and shoulders instead. That's often where market makers are building shorts. So I've cleared all that drawing off there. It started to turn a bit weird, didn't it? Yeah, that's not this kind of video. If you want to get that kind of video, you've got to look somewhere else. So yeah, really you can see that the market makers have building shorts in these wicks, building shorts, 1, 2, 3 hits to the high, and then moving lower. It probably won't make much sense at the minute for the market makers to come back up, because I think they're going to try and take a bit of profit here where this liquidity is, try and get people fearful, then maybe come back up to this range. And that's really the way the market works. As market is moving down, the market makers are building longs, and when the market's moving up, the market makers are building shorts. So totally opposite to what you get told in classic supply and demand and classic when price is going up, that's why people are buying, we need to be bullish. You just need to do the total opposite. So yeah, that was just a quick little impromptu video, because as you can see, when we started this video, this candle was looking quite bullish, and I can guarantee many people have tried to enter along here expecting these highs to be taken, but we've come back down. It's starting to look a bit more bearish now. So all these people that entered along up here are starting to become fearful, and they'll probably get to a maximum amount of fear as we come down, take this liquidity, and then hopefully move back up. So that's my play for the next couple of days. See how it goes. Might work, might not. I'm not a financial advisor, not a professional trader. I just do it in my own time. So don't listen to me, guys. Never take what I'm saying as financial advice. Just do what you want to do. But that's how you can try and try and look at the market in a different way if you are making common mistakes and thinking about the market in the way that everyone else is. So yeah, not financial advice. Try and take it easy. Don't forget to like, comment, subscribe. It really helps. Cheers, guys.